In this video, I will share a trading technique I have been using I like to call stock flipping that takes some of the emotion and guesswork out of picking stocks to trade. Now, there is a big difference between investing and trading. Investing is what most of your money should be doing. The money you want working for you to save up for retirement or a future purchase should be invested in the markets. This can include bonds or safe dividend paying stocks like bank stocks. Dividend stocks will pay you a small percentage for having your money invested and has a potential to increase in value over time. It is kind of like buying a young milking cow. The cow will provide milk that is worth some money, which adds up over time, much like a dividend. Eventually, you can sell the cow, hopefully for a profit, just like the stock. You may choose to diversify and invest into a sector of the market by using an exchange-traded fund called an ETF. They are similar to a mutual fund and can provide dividend income and growth as well without taking on as much risk of investing into a single company. It is kind of like buying cows and chickens instead of just cows. It allows you to not put all your eggs in one basket. If you have a good balanced investment portfolio and you want to try something more risky because all the casinos are closed during a pandemic, you may consider trading some stocks. I am going to share this technique that I have been using and has worked well for me. It is important to only risk what you are willing to lose. I only use 5 to 10% of my overall portfolio for trading stocks. It is best to keep most of your money in sound investments. I have to give credit where credit is due. I started this technique after watching a VectorVest video on YouTube and modified a few techniques and timing components to better suit my desired outcome. VectorVest indicates a 24% return using their technique. So here is what I have been doing. The basic concept is to find good value stocks that are oversold, buying them and then selling them once they are no longer oversold. I will talk about how to find these stocks using a screener shortly. One easy way is just to Google oversold stocks. Once you have a list of oversold stocks, you want to check several technical items. Here is what you want to look for. 1. The current price is above a 200-day moving average, meaning it has done well in the last year. 2. The current price is below the 5-day moving average, meaning it has pulled back. 3. The relative strength index, or RSI, for 2 periods is below 10, meaning it is fairly oversold in the last few days. Number 4, I prefer to use or look at is called the Williams percent range to see if it is less than -80, which also indicates it is being oversold over a slightly longer time period. If all these factors line up, it's a solid indicator for a trade under this technique. Using these technical indicators takes the emotion out of guessing what stocks to trade. Not all will be winners, but it gives you technical data to make a decision. Next, I like to check a few other factors, which is where my discretion and experience comes into play. 1. Check any news about the company. If there is negative news, it may indicate why the stock is down and therefore a good reason why it's oversold. Perhaps there's a better one on the list to choose. 2. Check Morningstar Rating. It tells me about the company and its overall value. If that stock is overvalued, or the sector is, I may not feel comfortable with it. I may want to consider something else. 3. Check the spread. Is there a difference between the current price and the 5-day price? If it's too narrow or too wide. I'll explain more about this in a bit. 4. Check the chart. Did something wacky happen, such as a recent large unexplained jump? perhaps the stock is just coming back to where it should be trading. Smooth charts are ideal. 5. Check the sector. Is this a stock I'm okay with owning for a bit, or do I feel the overall sector is in trouble because of a bubble? Is the overall sector or market in a pullback or large upswing? If so, maybe it's not time to try flipping that stock. If all the items line up, then I proceed with placing an order. I need to consider how many shares to buy, the commission cost, and my target sell price. I use Questrade, as my commission is typically $5 for a buy and $5 for a sell. There's free commission for ETF buys. If you like this video and wish to open an account, please feel free to click on the referral link in the video description. It is my refer a friend link and will provide you with a cash promotion from Questrade as well as for myself. I like Questrade for the low fees, especially if you want to trade US stocks. You can set up your account to keep the currency you trade. Therefore, there is not a conversion fee for each US trade like others charge. You only need to convert the cash once. However, do your research and pick whatever platform works best for you. So now I'm liking a stock to trade. What next? I know that my commission fees will be $10, so I know I need to make at least that much in profit to break even. Let's look at Grubhub, GRUB stock, their chart, and let's see what it tells us. The current price is $71.57. The 5-day price is $74.50, and the 200-day price is $69.36. The relative strength index, RSI, is 6, and the Williams relative percent is negative 87. So it meets all the criteria that we want. How much do I expect to make after the commission fees? I set the buy price at the current price or slightly below. I set the sell price at the 5-day average or slightly below that. Let's assume that we are trading approximately $500 at a time. Therefore, in this case, I would place a limit buy order for approximately $71.50, meaning if the price drops to $71.50, buy. I like using multiples of 5 or 10 shares at a time. However, in this case, it would be 7 shares at $71.50 for a total purchase price of $500.50. If the trade executes, I would put a limit sell order in for approximately $74.50 price. Over the next few days, if the price goes back up to the expected price, it would be worth $521.50 for a gross profit of $21 or 4%. I subtract my commission paid for a net profit of $11 or 2.2%. As you can see, a lower commission ratio is best, but you need to be comfortable with the amount that you're risking to trade. I typically look for stocks that will gross 4% or more using this method to cover the commission. Now, what if the stock does not return to the sell price you want? I find that on average, the stocks I have traded this way reach my sell price in an average of 14 days. Some as little as 1 day, others as long as a couple of months. However, if the price keeps dropping, as occasionally it will, then I need to have a stop loss plan. The VectorVest video suggested that when the 5-day price meets the current price at the close of the trade, then it is time to sell the stock. I typically will let a stock go for 2 weeks. After this, I will start to lower my sell price towards the break-even amount and follow any news on the stock or sector. If it drops more than 10 to 20%, I start to consider selling at the loss price. I consider factors like, do I want to hold it long term if this company is good, or do I want to sell it and use that money to try to flip another stock? So consider your portfolio and decide what is the best exit point for you if the stock does not go up as expected. Since using this method, I have only sold a stock at a gross loss 6% of the time at an average loss of 2.8%. So as you can see, over 100 trades, only 6 lost money. And with the winners making over 2%, it only takes a few trades to break even from the losses. This method is meant to give some technicals you can follow for trading to take the guesswork and emotion out of trading stocks. But make no mistake, it can be fun and addicting at times. So how do we get a list of stocks to consider? An easy way is to use Google to search oversold stocks and then check the technicals on each one in Questrade. Even better, you can use a screener. I use one with my bank. However, you can search other screeners on Google. For example, one of the screeners on open source is tradingview.com. Simply put in the parameters we talked about. I like to set the market cap over 2 million, the simple moving average 200, below the simple moving average of 5-day, relative strength index below 35, and the Williams percent range 14 less than 80. Running the screener like that should give you a list of eligible stocks to check. Once you have the list, check each stock ticker in Questrade to see if it meets the criteria we set out in the charts. When you set up your Questrade charts for checking your stocks, make sure you're always looking at the 1-year chart. As well, make sure you've set up your simple moving average for a 200 period and the 5-day period. As well as you can change your relative strength indicator bottom floor level at 10, not the default 20, for a 2-day period. So there are a few things to do when you set that up, and that is under Studies part of the chart. And don't forget, when you set up your screener to find a list of stocks to consider, you can set this up for Canadian or US markets, or tweak the screener however you find best works for you. I prefer to avoid certain sectors and to avoid penny stocks as an example. I hope this has been helpful and fun. Don't forget to use the link in the video description if you choose to set up a Questrade account. Happy trading!